Hey everyone, looks like we're live. Got some major news out of Pershing Square Holdings today that I want to get into. It actually came out probably 6 hours ago or 7 hours ago. So I woke up to the news, and it is this right here that Pershing Square Holdings has unanimously determined not to proceed with the Universal Music Group transaction. That's for Pershing Square Tontine Holdings, the largest SPAC ever created, and I guess in existence. They are canceling this deal, or probably more accurately, they're altering the deal. Pershing Square Tontine Holdings, that deal is getting canceled, but it's kind of being shifted into Pershing Square Holdings, which I'll explain in a little bit more detail in a second. But basically, before we get into what actually happened here, it's kind of important to understand what the actual deal was. I was actually planning on doing a valuation video on Pershing Square Tontine Holdings to see kind of what this deal was going to be worth, to see if Pershing Square Tontine Holdings is undervalued or not. So this will be kind of a good way to summarize it. That was going to be my video in the next day or two, but now it kind of needs to be canceled because, well, the deal is being canceled. But I'll get back to that in just a second. But here's kind of the basics of the deal. This is what was going to happen. So this isn't happening anymore. But Pershing Square Tontine Holdings are going to get 10% of Universal Music Group, one of the largest, if not the largest, music company in the world. Currently, it's privately held under Vivendi. Vivendi was going to spin off UMG, take it public in its own right, and then Pershing Square was going to get 10% of that. We also had the RemainCo, which was this extra cash entity. So $1.6 billion in cash was going to be sitting in here, plus a bunch of forward purchase agreements to potentially add a lot more cash. And Pershing Square Tontine Holdings was going to get about, or those shareholders would get about 1.15 billion of that sum. And then you had the Spark, which was the Special Purpose Acquisition Rights Company, which is a totally new invention as far as I can tell. And that was very similar to a SPAC, only almost in like an option form. So it would have been a right to purchase a future deal brought by Bill Ackman and Pershing Square. So it was a right, but not an obligation. So it really behaved like an option. At least that's how it sounded like it was going to be. And it sounded like it was going to be publicly listed as well, just like another sort of option, I guess. So you had some significant places for potential value on this deal. So that's what the deal was going to be. But obviously, this is very complex. 3 different parts. Typically, a normal SPAC deal would have been the SPAC merges into a company, and then that's it. The SPAC dissolves, or doesn't really dissolve. It literally becomes the company, takes it public, and then that's it. There's no cash left over in a separate entity. It's all staying within the company. It's a lot more straightforward than what they were planning on doing here, and I think the SEC didn't like that. But anyways, just to kind of understand what we might have been leaving on the table. Actually, I'll get back to that in a second. I want to go over what actually happened to this deal, but this is the structure that we were going to be working with. And if we go back over here, this is the Pershing Square announcement. They're explaining that they decided to cancel, but why did they cancel? And it goes to some of the things I was raising earlier, which is that the SEC might not okay this because it was very complicated. And SPACs in general are kind of in hot water right now, as there's some increased scrutiny on how they're supposed to account things and how SPACs are supposed to work, because these are a relatively new invention in themselves. And then within this new invention, Ackman is trying to create newer inventions within it. So the SEC doesn't like rapid change, since it's kind of goes against the regulatory scheme that they're going with. And I think that was a big reason here. Here, let me zoom in a bit so it's a bit easier to read. Our decision to seek an alternative initial business combination, which is another term for that SPAC merger. In this case, they weren't really merging. Pershing Square was just going to buy 10% of Universal, and then the rest would be left over. It was driven by issues raised by the SEC with several elements of the proposed transaction, in particular, whether the structure of that initial business combination actually qualified under the New York Stock Exchange SPAC rules. So there was definitely some uncertainty as to whether a SPAC could do this, to where they could just buy a portion of a business, but then all that cash should be left over and put into another entity. It kind of goes against the spirits of what SPAC rules are, I guess, but the SPACs themselves kind of go against the spirit of general reporting rules, in my opinion. But so I think that's where they're getting hung up. I don't even know how much the Spark and the RemainCo themselves really came into it, though I guess it's all part of the same pie. But that was kind of a big hang up, in that it wasn't a proper merger. Instead, it almost looked like a workaround to keep a lot of the cash on the table without actually putting it into the new merged company, which is kind of the point of how SPACs are currently designed. At least that's my understanding. So because of that, now when the SEC issues an opinion, it's not necessarily binding law in any way. It's more of a warning. The SEC will say, or in this case, the Pershing Square team went to the SEC, said, "Hey, here's the deal we're going to be doing. Is this okay? Do you think this would be okay? Do you think we'd be open to liability? Is this against all the rules? What do you think?" And it's not as though it's like a binding court decision or anything like that. It's an advisory opinion, more or less. And from that, the SEC will give their opinion, and then Ackman and the team will say, based on the opinion, we don't think it's really worth the risk to move forward, because if we do move forward, we'd be open to liability from angry shareholders if this deal doesn't go well, which that's always a chance. There's always a chance of that happening. So it's really protecting themselves from unnecessary liability at probably pretty significant cost, because this is a huge SPAC. People Certainly, there are many people still in the SPAC deal who are waiting to actually go through with it. Granted, it did drop quite a bit after the deal was announced, almost 18%. I think they mentioned it in this letter. Yeah, our share price has fallen by 18% since the transaction was announced on June 4th. That's kind of another signal that, hey, maybe shareholders don't like this complexity. It doesn't really make sense that right after a deal is announced, you'd think that a SPAC would get a little bit more momentum because the uncertainty is removed. But in this case, it almost added uncertainty because it was so complex compared to what most people probably would have been expecting from a SPAC deal. So while we were disappointed with this out here, we're actually going back a bit further. We and our counsel had multiple discussions with the SEC attempting to change its position on the issues that it had identified. My guess is about the RemainCo structure and whether they could keep all the cash on the side. Ultimately, our board concluded that it was in the best interest of the shareholders to assign the UMG stock purchase to Pershing Square, not Pershing Square Tontine Holdings, but Pershing Square, the sponsor of the SPAC, which is specifically permitted under the terms of the agreement with Vivendi. That I did not realize. I was kind of wondering, wait, they can't just do that. So it must have been written somewhere, and sure enough, it was. They gave themselves an out, I guess, in the event that something like this happened. I'm not going to say that this was the full plan the whole time, because it's kind of a goofy way to do that, but they certainly had that backup plan right there. As it did not believe that Pershing Square Tontine Holdings would be able to consummate the transaction in light of the SEC's position. So it didn't think that they could alter it or get through with it without exposing themselves to liability based on what the SEC was saying they would be exposed to, most likely. That's my guess. Management and the board believe the greater shareholder value can be created by working expeditiously to identify a new merger partner. So they just said, screw it, we're moving on, find a new deal, and we'll do a traditional SPAC deal where it's a proper merger, not a partial purchase, not a full merger, and the cash is left on the side. That means, what's next? What's going on now? If this deal's falling apart, you still have billions and billions of dollars sitting in the Pershing Square Tontine Holdings SPAC, even though it's been kind of knocked down quite a bit, almost back down to its cash value of $20 a share. Pershing Square Tontine Holdings has 18 months remaining to close a new transaction unless extended by a vote of our shareholders. So we're kind of back to square one. We got 18 months, and they're going to search for another deal. Allegedly, they're already working on other deals with the would-be RemainCo and the would-be Spark. So maybe there's something in the pipeline already, probably, seeing as though it's still a lot of money. And I'm sure this was always a possibility that something like this was going to happen. So maybe we'll get another deal pretty quickly. Probably take a few months at the least, because they probably stopped a lot of due diligence to focus on this specific deal. But again, we'll see. And while we're disappointed with this outcome, we continue to believe that the unique scale and favorable structure of Pershing Square Tontine Holdings will enable us to find a transaction that meets our standards for business quality. And then they just give kind of a sales pitch, and it's frustrating because this unique scale almost is a burden at this point, because it's hard to find a deal it's hard to find an undervalued deal at that size. Because typically, if a company is that big, where it needs however many billions of dollars, and it's worth taking it public, not by themselves, but through a SPAC, typically they're going to be okay and won't really be starved for cash, most likely, if they're that large. So it's going to be hard to get a pretty significant discount, one would think. Though it does appear that this UMG deal, there's some pretty significant discount in it for Pershing Square. I'll get to that in a bit. Back to the valuation work I was going to be doing for the Pershing Square Tontine Holdings, this deal that's now being canceled. But this scale, like I said, it's almost a burden. It's hard to find an undervalued deal at that scale, and we'll see what they find after this, because there's only so many targets out there that are this size, unless they just merge and then have this massive cash fortress within the company that they merge with, which I don't know how that would change things, but it could throw kind of a wrench into things how big this SPAC is, even though it's been knocked down a bit in the recent past. But again, we'll see what happens. A lot could happen from here. A lot could happen with SPACs still. It depends on what the SEC is going to be doing there. We've seen that they don't like this Spark and RemainCo structure, so that's going to stop any of that happening from in the future, one would think. And there might be some more scrutiny coming down on SPACs more generally in the near future as well, like I was kind of mentioning earlier. And back to that complexity point, our share price fell 18%, like I mentioned. While we believe our shareholders recognize UMG's extraordinary attributes, including its attractive growth characteristics, business quality, and superb management team, I think those are all very fair takes. It's a very strong business, at least based on what we know. We underestimated the reaction that some of our shareholders would have to the transaction's complexity and structure. We also underestimated the transaction's potential impact on investors who are unable to hold foreign securities, because it's going to be listed in Europe and maybe not in the US as an ADR or otherwise. Those who margin their shares, or those who use call options on our stock. So, I mean, I wasn't really sure what was going to happen there. I own my Pershing Square Tontine holdings in M1 Finance. I also own Pershing Square holdings in Fidelity. And Pershing Square Holdings is an over-the-counter stock. Tontine Holdings is on the New York Stock Exchange. And after this merger is going to complete, I think RemainCo is going to be in the Cayman Islands. I think UMG was going to be in Europe. And I don't know where the Spark was going to be. I think they were saying it was going to be New York Stock Exchange as well. So that's three different jurisdictions, and I don't know how complicated that would have been for a brokerage to handle. And certainly, people didn't really want to wait to find out. It seems, given the sell-off after the deal, assuming they even could understand what was going on, because it really is a complicated thing, and it's taken me a number of hours to even get a pretty cursory understanding of this deal. And that's kind of it. Furthermore, they expected the transaction's structural issues that would be resolved by the end of the year, and I guess you could say they were resolved. They were just flat out canceled. For those of you just tuning in, the Pershing Square Tontine Holdings deal is being canceled, but it's being shifted to where Pershing Square Holdings is now actually getting the Universal Music Group shares. So that's what's going to be happening now. Pershing Square Tontine Holdings shareholders, they're not receiving the Universal stock anymore, and instead, Pershing Square Holdings is getting assigned the right to buy 10% of Universal Music Group themselves, and that will be added to Pershing Square Holdings. So back to that valuation point, just because I did this work and I want to show you guys, just in case you want to figure out maybe what UMG is worth, or what some of the experts are saying UMG is worth. This certainly is not financial advice by any means, but back to this structure. So I was trying to figure out what this deal would have been worth if it were to go through, based on Pershing Square Tontine Holdings' current share price, which is a little bit irrelevant now, but just so you understand what UMG is worth. This was in the Pershing Square Tontine Holdings presentation they gave about a month ago, going over the deal, why they did it, and trying to figure out a valuation for UMG. This is a bunch of analysts' conclusions on what it's probably worth, and they averaged around a 39 billion euro enterprise value. And since it doesn't have a ton of debt or shareholder obligations, that's probably a good proxy for value, and then it's not like a debt's going to be throwing it off in a big way. And if you put that on a per share basis, Pershing Square Tontine Holdings is around 20. I was doing it at about $21 per share. I think it has dropped this morning given this news. More disappointing news, I suppose. Maybe it's good news for people who didn't like the complexity, but certainly not something that people were expecting. And uncertainty is the bane of any investment. It tends to be. So the average would be about $15 per share in UMG value if you were to believe the analyst's average value per share on UMG. So I kind of put that in an equation. How much value of UMG would Pershing Square Tontine Holdings be getting if this deal were to have gone through as it was drafted? In this case, here's the value I suppose that Pershing Square Holdings might be getting through UMG, depending on where it lists at and what it's actually valued at when it goes public, which remains to be seen. We'll see. But just kind of getting a ballpark, if these analysts are correct at all, if we take the average value of 39 billion euros, multiply that by 10% of the company, that's 3.9 billion euros, which is $4.61 billion. So no small feat. And they're buying it at a 30, what was it? buying it at a $34 billion, 34 billion euro valuation, which is like $41 billion or something like that. So already a discount there if it trades at the average of what analysts say. And if you do a more aggressive valuation, like the JP Morgan valuation was about 50 billion euros, which is something that the Pershing Square team thinks is a very accurate, much more accurate valuation, naturally, given their incentives to say that the deal is great, of course. If you were to take that aggressive valuation, which is not pie in the sky thinking based on some comparables, it could certainly trade for that, but we'll see. But if you were to take that, that's 5 billion euros going to Pershing Square, or would have been going to Pershing Square Tontine Holdings, now going to Pershing Square Holdings, and that could be about $5.91 billion in value of UMG going to Pershing Square now that it's been assigned to Pershing Square. And I was kind of putting it together. Here's the value that Pershing Square Tontine Holdings would be getting. If this is to be held correct, again, not financial advice, and this really isn't that relevant anymore, anyways, if this deal's completely falling through. But that would mean that it's about a $5.6 billion in value if you don't even assign any value to the would have been Spark, because that's kind of hard to value. It's more uncertain. It would have been a right to purchase a deal, but it's not like you're getting any cash value there. You could trade the security. So whatever that premium would be, I don't know what it would be, but that's probably what you'd get. So it seemed like there's a pretty substantial discount if you were to take the average valuation on UMG based on what the analysts were saying. You would have had about a 28% discount if it traded at that average value right away as soon as the deal was complete. So, and that's just based on the cash value of RemainCo. That was subject to changes of warrants and forward purchase agreements. Who knows what's going to happen there? And then also if a deal is announced, just kind of a very basic distilled ballpark valuation. Seemed like it had a discount there. But if you took the aggressive valuation, so you bump up the UMG shares to 5.91 billion, that's about $7 billion in value that would have been going to Pershing Square Tontine Holdings. And based on what it was trading at back on Friday, that was at about 4.15 billion in enterprise value, which is the same as our market cap because it's all cash. So about $41 billion. And that is $4.1 billion. And that would be a 41% discount to the actual value that they would have been getting if this is to be taken as true. So it looked like you had a pretty good deal to buy into Pershing Square Tontine Holdings. But of course, we had the big dagger, which was uncertainty. And investors don't like uncertainty. They don't like complexity. And that ended up being what has more or less killed this deal, killed it for Pershing Square Tontine Holdings. Some of it has certainly been preserved for Pershing Square Holdings, which I'm a larger shareholder of Pershing Square Holdings than I am of Tontine Holdings, since I think it has a little bit more going for it. And SPACs are just a newer space with more uncertainty. That's added risk. The SEC certainly added a lot of risk to this project here, and that it threw a wrench into the whole deal. That Pershing Square Holdings didn't want to go through with it as it was drafted because of this complexity. They didn't want to open themselves up to extra liability because of the breaking SPAC rules or whatever it was. So they didn't do it. So instead, they are now going through with this share assignment to Pershing Square Holdings. Pershing Square Holdings will keep UMG as long as that deal closes. Of course, there's no guarantee that will close either. But if you're a Pershing Square Holdings shareholder, not much should change. It depends on how people feel about this deal in general, who are Pershing Square Holdings shareholders, not Tontine Holdings, the SPAC. If you're a Tontine Holdings shareholder, this is definitely a big deal because this was the deal you thought you were getting. However, at least it's closer to cash value, so you wouldn't expect the SPAC to go down much more in value. So maybe your downside's protected, but again, who knows? It totally depends on what the SEC does with SPACs. But you're certainly not in the same position you were just a few days ago, thinking that this deal was probably going to go through. You're going to get UMG shares, you're going to get RemainCo shares, you're going to get a Spark. Great, you get those three things and you go on your merry way. That's not happening anymore. You're not getting anything. You will get nothing and you will like it. And but of course, you get to hold on to Pershing Square Tontine Holdings, and now they're going to go for another deal, and maybe it'll be more like a quote unquote normal SPAC. We'll see what happens. But while I'm rambling, if you guys have questions, I'd love to get to those in the comments. So feel free to leave some questions in the chat, and I'll get to those in a second. I see we've got some people on right now, which is fantastic. I saw Karan, you had put out a video earlier. Being from the UAE, you got to do it right away since I was asleep when the announcement was made some 6 or 7 hours ago. It is so go check out Karan's video when you get the chance after this live stream. He did a nice quick breakdown on it too. Definitely disappointed since I like the deal, although complicated. I think that's a fair take. That's how I was feeling as well. It's it was complicated for sure, and I think that was scaring away people, and maybe that created a value opportunity, like I was kind of showing with those basic valuations that I was going to be doing in a video. I'm glad I got to share them at all. Once people maybe figured out, or once this deal went through, and we figured out, okay, this is a legit thing. The SEC is not going to stop it, and things are more liquid now. They're trading, might get a better valuation there. But I think people just didn't even want to go through the trouble of even trying to understand the deal in the first place. And well, you could say they were right, I suppose, at least right now, given that they didn't go for it. Um, he said that if the size is an issue, they could pay a dividend to pursue the opportunity. Um, is that about? Uh, is that as though Pershing Square Tontine Holdings would pursue, or would issue like a dividend from a SPAC? Can they even do that? Um, As in they distribute some of the cash out to make it smaller or something like that, so it's not too much cash. I don't know if that's what you mean there. Um, Disappointed in Bill Ackman. This is not good for Pershing Square Hunting Holdings and Pershing Square Holdings. So I don't know. It depends on your position. I think it is going to hurt his reputation in the short term for sure, which will hurt both entities. I would think. People don't like it when you pull out of deals, even if it seems semi warranted, because you could certainly make the argument that you could see this complexity from a mile away. This was going to be a problem, so why'd you go through with it anyways, or why did you even try to go through with it? You could make that argument for sure. Long term, in the grand scheme of things, I think he'll be okay. He has a pretty good track record. He's made mistakes in the past and has recovered from them. And I would hesitate to call this a flat out mistake. There's certainly some there's opportunities to recover here. This could just be a hiccup. It could get an even better deal after this. It's more simple, straightforward, and plus, Pershing Square Holdings is still getting UMG at what appears to be a pretty good price. But again, beauty's in the eye of the beholder. So I don't think it's a terrible thing to happen. I would not call it good based on what we know now, unless of course there's another deal tomorrow that is way better. But that's kind of unlikely. But it could happen. And to that same point, mind potentially, you're firing off the questions. Don't you think it's going to be harder for Pershing Square Hunting Holdings to get a good deal? Like I was saying earlier, the size I think is the biggest thing hindering them from getting a good deal. I don't think canceling this deal is going to be a problem at all because again, they're not really canceling. So from a company perspective, UMG is still getting the money they want. They don't really care who gives it. It's the same managers either way. Pershing Square Holdings is just the new buyer, not Tontine Holdings. So it doesn't make a difference to UMG. So I think a potential seller isn't going to really care. They're taking Pershing Square's money either way. It's just whether it's from the SPAC or not. I don't think this will make it harder for them to get a deal. The only thing that's remaining hard is just how big the SPAC is. It's going to be very difficult to find something that at a good price at that size. It's just there's fewer opportunities, and when there's fewer opportunities, it can be very difficult to actually find something below what you're trying to get it for. My potential. I'll get your last question here. Am I selling out of PSTH? Probably not, only because it's so close to cash value, and I'm kind of just holding for a second because I'm about to close on a real estate deal, so it's kind of outside of the stock portfolio. And plus, my position in Pershing Square Tontine Holdings isn't very big; it's only a couple grand, which compared to the rest of my portfolio is not very much. And I don't think it's going to go much further down than it already has, given that it's closer to $20. Not advice, of course, but I'm not too worried about it, at least in the short term. I'll reevaluate what's going on here. Maybe I'll sell out of it and actually just move it into Pershing Square Holdings straight up. But we'll see. Right now, I'm not doing anything. By what I was going to buy some more this morning until I saw the news. I was like, oh, okay, never mind. I'm not going to buy anything now because I assumed it was going to go down in the morning, and sure enough, it did. So we'll see what happens. The Ryan Johnson points out that there is a possible pullback in the market. I think it's down kind of significantly today, though day to day, you never know what's happening in the stock market. Might allow for better opportunities than holding Pershing Square Tontine Holdings for another year. Yeah, maybe. Uh, I'm certainly putting more money towards other things right now than this SPAC deal. I bought initially into Pershing Square Tontine Holdings a long time ago, so last year is where I put most of my money into it, and I put a little bit more into it very recently after the deal was announced, thinking that maybe it would go through. But I didn't put a lot in because I was worried about the SEC saying no, this deal isn't kosher to what we would have wanted to do. Um, So I don't know. We'll see. There's an opportunity that we actually talked about on Punch Card Investing. It's a real estate company that Brad Kellner brought up, and it's certainly enticing. So I'm doing a lot of research into that now. I bought a very tiny position this morning as kind of a feeler position to see to entice myself to do more research once I close on my current real estate deal. It's funny that even in my stock portfolio, a lot of it is in real estate. Equity Commonwealth being my second largest holding, which is a bunch of which is a, a REIT owned by Sam Zell. And then I also have within Pershing Square Holdings, there's Howard Hughes, which is a real estate development company. So even within there, there's some, but a large portion of my stock portfolio happens to be real estate as well. I got that. Certainly a bias. I like to call it an expertise, but it kind of works as a bias. So yes, Ryan, if there's a great opportunity, I'll go for it. I'll be happy to move it out of Pershing Square Tontine Holdings. If it looks like we're gonna have to wait at least a few more months for another deal to even come close to closing, then who knows? They are working on deals. And then Kron to that dividend question. Yep, he said they could do that in a CNBC interview. And I think I had that. I'm looking at the article right now. Actually, let me pull that up. This is the Pershing Square Holdings, or this is the CNBC announcement on this. Apparently, he went and talked to CNBC directly, beyond just the announcement we already looked at from Pershing Square directly. Here it is, a dagger in the heart of the deal. So Ackman told CNBC exclusively on Monday that the SEC first approached his firm to express concern that the new entity being created as part of the deal would become an investment company. I think that's RemainCo, or maybe probably not the Spark. It's probably RemainCo, which is where the extra cash would go. And investment companies are subject to all sorts of different rules, and they didn't really like that, of course. So they were trying to work around a lot of the SEC rules, it seemed like, and SEC didn't like that. Whether that was intentionally or not, that's what it certainly looked like. In order to address the SEC's concern, we changed the structure of the deal to provide that we were going to contribute the stock that we purchased to a trust. We thought that would address the issue. Apparently it wasn't. So they didn't do that. And they're just deciding that, hey, we're going to move on. Then we signed the deal and then we pushed forward with the transaction. And then actually this week, in the last few days, the SEC raised, I would say, a quote unquote deal killer, which is they said that in their view, the transaction didn't meet the New York Stock Exchange SPAC rules. So I guess they just got the news very recently, officially, that they didn't like the deal. Maybe they got some rumblings before they actually went through the deal that they weren't going to like it, and then they officially got the news. Yeah, we definitely don't like it. You probably shouldn't do this. It's probably what happened. The dagger in the heart of the transaction, as he put it, and it put them in a very awkward spot. So that's what he said. Back to your questions and comments. Good stuff in here, guys. What next move do you think Bill Ackman's going to do to recover from this? Probably what he was already in the middle of, which is finding another deal. He said for RemainCo and the Spark, he was trying to find another deal anyways. They were already underway in due diligence, so probably just find another deal. That's all he's ever trying to do, I suppose. Maybe No, I was going to say maybe he'd sell off some more holdings in Pershing Square, the fund. But seeing as though they're buying UMG, they probably don't have a ton of extra cash lying around outside of the SPAC. But who knows? I would think they're just going to find another deal. They're constantly looking for deals. Maybe with, per Ryan's comment earlier, of the market pullback potentially in some sectors or some individual companies, maybe there'll be some opportunities there. They have been shown to move pretty quickly. We saw with Domino's recently. They sold off Starbucks, and then a week later, they had an opportunity with Domino's when it fell 30% in price for seemingly no reason. They went in and bought in, and now they're already up like 25 something percent on that position that they opened up just a couple months ago. So something like that could happen. Maybe that'll be within Pershing Square Holdings. Maybe it'll be through the SPAC. We'll see. But I'd imagine they're just looking for another deal as always. And who knows what it's going to be, whether it be a private company or buying another public company through the fund itself, not through the SPAC. They have 18 months to make a SPAC deal happen unless they do an extension. And they're certainly incentivized to get that deal happening more quickly than not from a reputation perspective, I would think. Back to zero. What Pershing Square can buy now? Well, they're looking for a large private company. I don't know how long that'll take. And I wouldn't say they're back to zero. They still have all the cash in there, so it's not as though it's terrible. But yeah, they are kind of back to square one, you could say, and that onto a new deal. I don't know how long it'll take, but they're trying to buy something. I'm sure Unicorn was one of the types of targets. Universal Music Group, I think, fits the bid. for Pershing Square Tontine Holdings SPAC goals. But the problem is they just couldn't invest more than 10% because of tax issues, which was well below the actual value of the whole SPAC. That was the big problem with the UMG deal. It's still a great deal, it seems like, but the problem with the SPAC perspective is it had a lot of leftover cash after that. And that's not exactly the goal of the SPAC. They tried this workaround. SEC didn't like it. So now we're back to square one, you could say. After dinner investor, good to see you here. Love to see a breakdown of Howard Hughes, the Howard Hughes investment. It's a real estate development company within Pershing Square. I've only done some limited research on it. So I should do a deep dive since they've added quite a bit to it, even though it's done pretty poorly, I think, just from a price perspective this year. So they've been buying more into it. I'll have to do something in the near future. So thank you for that note. Just looking at the chat again. Is the crash already here? I'm all I'll say is just be careful assuming that a slight pullback in the market in one day or even a full week is a crash. Obviously, be careful. Really, you should just be looking for great deals in the stock market. If you're buying the whole market, then yeah, sure, you got to pay attention to the whole market. But if you're just buying straight up companies, look for a good deal, kind of like what Bill Ackman does. He tries to find an underpriced company based on its current value. That's what Warren Buffett does as well. It's what a lot of great investors do. I mean, if you're not willing to put in lots of research and also take risks and not having as diversified as a portfolio, then don't do that. But um, if you are doing that, then it doesn't really matter what the market is doing if you're buying great companies. So that's my philosophy on it now, or it's increasingly becoming my philosophy. Though paying attention to the market is somewhat important just for understanding risk and the environment that we might be in. And some companies are a lot more sensitive to larger market fluctuations than others. So if there is a crash already here, which it's probably kind of hyped at the moment, even though it seems like it is. The market is down quite a bit this morning. I wouldn't be too worried just on one day alone. Now, if it turns into a month, okay, maybe there's going to be some big buy opportunities, more than we've had in the last year and a half or so. So keep you posted, I suppose. Couple non-Pershing questions. Mr. Misery here. Assuming you're good at real estate. I'll say I'm good at real estate, I guess, maybe better than the average person. I assume you should also take a look at some banks. Might be very well within your circle. There are lots of good banks lending to commercial, residential real estate, I assume you were going to say. I've looked very little at banks, just in general, at least for larger banks, which that's kind of all there is, at least in the US, especially. They've all been consolidating through the last few decades, thanks to uh, totally manipulated yield curves and everything like that kind of throw off the lending market and the Fed buying up all sorts of loans. And anyway, without getting too much into monetary policy, one thing I don't just like about banks in general is they typically have a lot of exposure to financial derivatives, and that are very hard to value. Like JP Morgan Chase, for example, I think has a massive derivative portfolio, or yet it's kind of impossible to value what it actually is. So I don't really know what kind of risk JP Morgan would be facing. Plus, a lot of banks usually have quite a bit of debt too. Granted, it's usually super low interest, but again, there's risks there. I'm not saying that there's no good deals out there, but it's just a lot to dig into. And it's more than just knowing, okay, I know how lending works, because they do a lot more than just lending. You have investments, you have derivatives, credit default swaps, insurance in some cases. There's lots of different banks are very complicated now, at least the larger banks. So it's a lot to dive into there. So that would be my comment there. That was a little bit off topic, but I appreciate the question anyways. Any more questions on the Pershing Square deal? That is no more. The Pershing Square Tontine Holdings deal. One more refresher if you're just tuning in towards the end of this stream. The Pershing Square Tontine Holdings deal is falling apart. They have decided to back off from the UMG merger, or it's not really a merger, the UMG purchase that Tontine Holdings was going to make. They are backing away from that because of SEC concerns, it seems, or at least that's what they're saying. And then Pershing Square Tontine Holdings is assigning their right to purchase Universal Music Group's shares. They're assigning that to Pershing Square Holdings, the sponsor of the SPAC. So if you're a Pershing Square Holdings shareholder, not a whole lot is changing. If you're a Tontine Holdings shareholder, a lot is changing in that the deal is not going through anymore, and instead Pershing Square is taking all the cake at the moment, or at least part of the cake that would have been there. There's no more RemainCo, no more Spark. All that's happening is Pershing Square Holdings is buying into Universal Music Group, not through the SPAC, just buying it directly because they were assigned the shares from Tontine Holdings. So Tontine Holdings is now trying to find a new deal, and that we'll see what they come up with in the future, but they're going to try to make it a more quote unquote traditional SPAC deal where it's just a merger. They're not trying to do this complicated structure that they did here, since that went against what the SEC wanted to do, apparently, which is really not surprising given how new the SPAC space is and some of the inventions that they're creating here with RemainCo and the Spark, which really aren't really are a totally unique structure get for a SPAC. At least we haven't really seen that happen, at least successfully. I see Al here. Do you think there might be another lockdown? I mean, who knows? If I could tell you, then I might be like a politician back in February making lots of different investments if I knew that there was going to be another lockdown back in February of last year of 2020. The quasi insider trading. I might have been doing some of that if I knew that there's a lockdown. I don't know. And plus, it's state to state in many issues, at least in the US. Other countries might be very different. We'll see. Again, you just got to take stuff like that in stride because it's very hard to predict. But if there aren't any other questions, I think I'll wrap it up there. Certainly some big news here in the Pershing Square world, in the Bill Ackman world, and in the SPAC world in general. This has probably quelled a lot of things that certain SPACs might have been looking to do to mimic Pershing Square Holdings. It's probably mimicked, or it's probably changed Pershing Square's perspective on what they can do with a SPAC. It's changed probably everyone's perspective on what they could do. So some more clarity in SPAC world, I suppose. Maybe that's a good thing, but it's not good for this deal if you were looking forward to it, as it is being completely altered. Tontine Holdings not getting the deal. Pershing Square instead is getting all the shares, taking all the cake in this case. However, the reputation hit could be pretty substantial, at least in the short term. We shall see. Anyways, if you like this video, please like it. That'll help the channel out a lot. And be sure to subscribe if you haven't already. And also follow me on Twitter. I've been trying to grow my Twitter following. I'm up something like 100 followers in the last couple of weeks. So off to a good start, I guess. And I'm trying to do more investing kind of market content over there too. And then also I'll post videos that might be relevant to a particular topic there too. But yeah, definitely follow me on Twitter at Jack Duffley. And otherwise, subscribe, hit the like button, all that great stuff. Leave a comment below so we can pump it up for the algorithm. Thanks, everyone. And until next time.